time to check in with CoinDesk's global policy and regulation expert, Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Welcome, Nick. So, crypto lending platform BlockFi is receiving a cease and desist order from the New Jersey Attorney General. What's going on?
Yeah, so late Monday, Forbes broke the news that the New Jersey Attorney General's office, and specifically the new acting Attorney General, who just took office, I think on Sunday, possibly, or within the last certain couple days, certainly, was filing a cease and desist to prevent BlockFi from allowing new New Jersey customers to sign up for its BlockFi interest accounts service, which is basically lets customers invest a certain amount of crypto, and they can get the interest paid out. New Jersey Attorney General's office, in an order that was published yesterday, said that it's because, in its view, the BlockFi interest accounts themselves are securities based on, among other things, the fact that BlockFi will invest the funds into a couple different things without really providing a disclosure or a breakdown of what exactly that money is headed towards.
So, Nick, speaking of disclosures, USDC, they put out their disclosure of what's on their asset side. Not everybody's happy with it. What's going on there?
Yeah, so Circle published a breakdown of what's backing its reserves, or at least a rough breakdown, saying that, the 61% is in cash and money market funds, which it's treating as a cash equivalent. But it also has, I think 9% in commercial paper and a little bit in commercial bonds, municipal bonds, things like that. Um, so this is the second major stablecoin issuer to do so. Tether, of course, was the first one, but I think arguably USDC provided a little bit more information because we have a specific S&P rating on paper for each of the investments it's made. The other interesting part is that Circle has only 9% in commercial paper, and Tether had, I think, closer to 50%. So there's definitely a massive difference in what exactly the breakdown is. Now, the other question is, is the fact that Circle has investments in, what are arguably, some of these things could be called securities. Does that mean Circle is basically fractionally reserved, or that, it should be, taking a closer look at, what exactly it fits in under the regulatory regime? And those are some of the criticisms that you alluded to earlier.